What we see actually now, which is very interesting, is that in Denmark and Finland, the first quarter this year was more than 50%. That was actually foreign investments. Same thing for Norway. Foreign investments in Norway is actually increasing quite heavily. And in both of these three countries, the foreign investments percentage of the entire volume is higher, and a lot higher than in Sweden at the moment. And I think there's different reasons for that. Some of it may be currency. Some of it is for especially Norway. It's actually access now to the assets. Foreign investors are allowed in, I would say, much more in the acquisition processes. Before, it was very much locally based. It took 2 weeks, basically 2 weeks from being able to buy it, know that the asset was on the market till it was actually signed, which is way too little time for an international investor. But now the processes are getting a little bit longer and we are allowed in. Part of it is because a lot of the big pension funds in Norway, but also in Finland, Sweden and Denmark are actually looking, not so much Sweden, but the other countries are looking very much abroad now to diversify their investments, to spread the risk of several countries. So they're actually selling out of their portfolios, some of them, to reuse the equity and invest internationally.
Okay,
so that's a very important trend that's very good for the Nordics, because that means a lot of more liquidity in the market. One of the issues we've had is liquidity, and I agree, Sweden is definitely the fourth, as I see it also, the fourth largest liquid market in Europe. But the other markets have not been, and that's historically, that liquid, because a lot of the investments have been bought by local institutionals and local pension funds, and they have had these assets on their balance sheet for 10, 20 to 30 years. They're now starting to sell out because they found out, for example, in Finland, 95% of their own balance sheet is investments in Finland. And maybe, and that was even prior to the Russia-Ukraine issue that a lot of people are discussing about, but they actually found out that maybe it was not that smart to have all their investments on their own balance sheet, because most of them make their investments on their own balance sheet and not through funds when they go local, to have that much capital invested in their own country. So that's what they're doing, and those two trends are very important to recognize, because that means the liquidity in those markets, which have been seen as non-liquid, is picking up.